Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so in this video, going to be kind of a different format, might be a new format for the channel. I'm really just going to be going over some tweets of mine over the past week because I've effectively been posting data on X from unusual whales that highlights some trades that I think will be performing well in the next month or so. I don't really know exact timelines, but the unusual whales data does, in my view, indicate that a move is about to happen when big money starts moving. And so I find that to be really valuable. And this is really just, kind of my dive into this data for myself, for my own interest, because it's valuable for me. Hopefully it's valuable for you guys. There will be timestamps to all of the tickers down below. So you can skip to your favorite ticker if you like, but I will probably forget things. We'll probably circle back. And so it's probably good to just watch the whole video. It might be around 2 hours long because I got a lot to cover. But yeah, this here is my X page or my Twitter page. It's dgen_Ann because I am Andy. Unfortunately, dgen_Ed is taken. And so yeah, this is my page. I do want to note that Sunday streams used to be at 9 p.m. Eastern, and I was doing pre-market preps, but I actually find these kind of videos to be a little bit more useful, hopefully more valuable to you guys as well. And I will try to stream tonight at 10 p.m. Eastern. That's when I have been doing it lately during the summer, just because the sun's still out at 9 p.m. Eastern where I live, and so I want to take advantage of that. But I am going to a movie this afternoon, going to see F1, so I'll let you guys know if I like it. I suspect I will. But yeah, I'll try to stream at 10 p.m. tonight. But if I'm a little late, please forgive me. I do have work tomorrow in the morning though. Yeah, so just wanted to note that because I need to update that. Also need to update this, but it's just I've been doing the channel for almost 2 years, and yeah, I mean it's been a lot of fun. And also, since I did mention unusual whales, do want to just scroll down here to this to mention that they do have a 4th of July sale. I believe it's going on until the 8th. For me, like I say up here, I got a month subscription and didn't have enough to learn. So didn't have enough time is what I meant to write to learn. So I got the annual during the Black Friday sale, which is the same kind of sale as 4th of July. And every couple of months they do sales. And since then, I've been learning so much, a great tool for identifying and timing good trades. So, that's basically what this video is going to be on, with a little bit of an intro, and also wanted to do a little bit of math on compounding gains. I've got some notes in a notepad I want to make sure I mention, but this kind of came up from an exchange on X. So again, I would encourage you guys to follow me on there, just because you can ask a question, whether I'm at work, whether I'm in front of the computer, or wherever, I can respond. And also, if I do respond and it seems fairly direct or maybe not that helpful, it's probably just that, I don't know, and I'll probably forget to respond if I don't, so I'm just doing a quick response. So please, if I seem a little direct ever, don't take offense. It's just me trying to respond, and sometimes you guys give me great ideas. Sometimes I can't follow up on them. One of those is plug power. I'll try to do a video tomorrow on plug, but I'm probably not going to be able to do it today. I'm just a little too busy. But thanks for the comment on that. It's put it on my mind. There's just not that much options data for plug, at least that I'm seeing, so I'm not going to get into it in this video. But yeah, wanted to talk about compounding gains, as that did come up on X. I'm talking in circles here, so good to not skip to the ticker, good to watch the whole video. But the timestamps, like I said, will be down there. So with compounding gains, this came up with bull that was running, and I was a little bit cautious. I did take some profits a little early. And, with that, I missed out on like hundreds of dollars of gains. I didn't really have a huge position, but I missed out on some money. And that actually reminds me of, in this post here on, Webull raising some money, that they kind of rug pulled their investors do that, which, I mean, that's what stocks do. That's what companies do. That's why they have publicly traded companies or publicly traded stocks, so they can raise capital as needed. So, but, I had mentioned that, Bull starting the holiday weekend off by taking your money down over 5% in the after hours, illustrating why it's good to take profits, trim after big moves. And that kind of reminded me of, this post from when I did a video on QuantumScape, ticker symbol QS, that Grok estimates a 60% likelihood that QuantumScape raises capital following a 30% gap up today. And so for QuantumScape, the position that I had, I took profits too early and I missed out on at least $500 in profits. And so that sucks. I could have made a lot more money. But at the same time, we're never going to buy the exact bottom. We're never going to sell the exact top. And so with that being said, you're always going to be a little bit red at the beginning because it's going to go lower than where you buy. You're always going to be missing out on some potential gains. It's going to go higher than the level that you sell at. And like I've said, I feel like I try to be fairly transparent about the positions that I have, the sizes. They're usually not that big. Right now, if I'm missing out on hundreds of dollars of gains, that sucks. But if the strategy that I'm using, I continue to get better at it, those hundreds of dollar gains that I'll be missing out on will turn into thousands, 10,000s, maybe hundreds of thousands of dollars. That's like, oh, if I would have held a little bit longer, I would have made 100,000 more dollars. And so right now what I'm doing is I'm actually conditioning myself to see a chart, to see a stock go higher than where I sold at, recognize, hey, I could have made a few hundred more dollars. That's fine. Because with QuantumScape, I had the concern of raising capital. And while that wasn't applicable for QuantumScape, I could have made $500. Looking over at Webull, I only missed out on a couple $100, I believe, in missed gains. But if I would have been like, oh, well, I missed out on $500 with QuantumScape, I'm going to make an additional $500 with Webull, I would have gotten rugged. So I think that that's like a really good lesson to take profits, to be in and out of trades. That's what this channel is really, the goal of it is to be in and out, but some of those have become longer trades, unfortunately. But yeah, the idea is to be in and out of trades, taking profits, stacking gains, and that comes to the point on compounding gains. So this was an exchange. I'm not going to pull up the exchange, but I'll pull up the calculator. But this was just based on, somebody with Webull having taken 35% profits. And, it went up a little bit higher throughout the day. They could have made a little bit more money. But then after the close, they announced the raising of capital. And now I believe it's below their average. So they made, 35%. And so while 35%, it's may seem like a lot, it's more than 10%, it's more than a few percent, but it's not, 2x or a 10x. And, that's really what we want. We really want to be making a lot of money. But if in the span of the month, let's say you make a 35% gain, or let's just round it down to 33%, so that times 3 is approximately 100%. And, thinking about compounding gains. So let's say, excuse me, at the beginning of the year, there is a 1 times the size of a position, so one whole position or 100% of a position, and over the course of that first month, so January, this person makes 33% profit. So we then multiply that 1 by 1.33. So 100% of that initial plus that 33% gains. And so from that, of course, it's a 1.33% position. But let's say that compounds. February, the exact same thing happens again. There's another 33% gain on the entire position. And so that 1.33 gets multiplied by 1.33, and that's now, getting close to a 2x, 1.77. And let's say again, the same, position that's just been growing, compounding those gains. March, another 33% month. And so, oh crap, I screwed that up. I'm not going to edit this, I'm sorry. But so 1.33 is for January. Multiply that by 1.33 for February, and then multiply that by 1.33 again for March. And so that's 2.35. And just so we're all clear, that's 1.33 cubed, or I could do that as I was doing before, 1.33 times 1.33. This is for January and February. 1.77, multiply that by 1.33 for March. 2.35, that's more than a 2x within the quarter of a month. And since we established that since these gains are compounded, we're just moving that number into, moving it to that power. So this would be cubed for 3 months. And so if I adjust the calculator, let's see, to be scientific, we can see that 1.33, going to go to cubed here, and let's see what that equals, 2.35. Okay, so we're all on the same page. And so let's say we continue to get 33% gains. We don't get greedy. We don't go for 50%. We just do 33% gains. And I'm not saying that I'm trying to do this. I'm just saying this hypothetically. If we do 33% gains every single month for the course of the year, I would think that, 33% that would be about a 2x every quarter. So that would be like, I guess, an 8x over the course of the year. Something like that, because there are 4 quarters, a 2x in 1 quarter, 2 times 4 quarters, 8x, something like that. But if we come back over to the scientific calculator and do 1.33, so that's 33% gains for, just going to the x with the superscript y, and going to do 12 months. And so we can see what that would result in the position at the end of the year. And so that's a 30x. That's pretty crazy. So it's not an 8x, it's much larger. And so I think that's really just a very nice illustration of compounding gains and why it's good to not be greedy, because you might get rugged, or maybe you'd think you'd get rugged, like with QuantumScape, and you'd miss out. But because you were careful there, you were careful again here, and you didn't get rugged. So I feel like that's kind of a nice, valuable example. But let's say 33% is kind of a lot. Maybe that's not going to be happening every month. So let's say we do 10% gain every month for 12 months. And so that, I would think, just 10%, a little over, 10 months in the year, 12 months. So that's probably like a 2 to 3x, something like that. And so let's just do the math. I have not done this before. I'm just going to do the 1.1, so that's 10% gain. And I'm just going to do that to the 12th power. And so we can see what the gains would be over the course of the year. This is about a 3x. So that's pretty good. I mean, that's kind of in line what I was thinking. But really, I mean, I think that's what I want to be shooting for. I want to be shooting for quick 10 to 2x gains, depending on the contracts or the positions that I'm holding, where my average is, and that's also a key part of it. So I just wanted to go over that and kind of this long introduction. And also related to that, I will get into Webull here. But like I said, I did exit my position. One of the reasons why I was not as confident with my position in Webull is because it was first introduced to me because of somebody on X. who I respected the way that they did their charts, but then I later learned that they don't look at options. And then because of that, I wasn't seeing any good data in Webull at the time on ticker symbol BULL. And that made me realize like I wouldn't be in this position with it if I wasn't following this person, because I don't see anything in the options data. They don't see anything in the options data because they're not looking. And I feel like it's just wasting a bunch of time. Once I saw some data in the options data popping up, standing out, that actually there were some questions about my interpretation of it on X, and that really helped me out. And I realized, well, this is looking really bullish. And so that is when I should have added more or been aggressive or established a position, because I didn't really have my own conviction before. The chart looked good, but there wasn't anything in the options data telling me it was going to move. And it bled for like a month. And so I think it's really good to, whether you find a ticker because of somebody online, or if you're just a fan of the stock, make sure that A, the chart looks good, B, the options data look good. That suggests that there could be a move very soon. And also, number 3, have conviction in it. And an example for me of not having conviction in a play, I believe this is going to be Peloton over here, PTON. And so this comes from, I was talking about somebody who I didn't have conviction in because they don't look at options. Somebody who I find to be great for posts on X, who does a lot of great work with unusual whales and options, is the Bronx Viking. Highly recommend following him, the Bronx Viking on X. And so his profile is over here. And another person who also does a lot of great work with options is going to be Orlando. And he actually just put out a video on Unity software, or that features Unity software over here. And so I find that to be really valuable. So I would encourage you guys to follow the Bronx Viking and Orlando on X, and then also, Orlando's YouTube channel. But just coming back over here to, let's see, Peloton. So I had mentioned here on May 23rd, so this was a while ago, I've got a small position in Peloton, eyeing $10 and an inverse head and shoulders pattern, suggesting target could be hit by January. Having fun with contracts while also exercising risk management in these volatile times. Went over the inverse head and shoulders in this pre-market prep video. And, just scrolling down, this is the head and shoulders pattern. This was in response to the Bronx Viking, who posted, let's see, this, which was on May 20th over here. And so what we can see is this big spike in, that big candle there that represented a candle volume of 10,000 contracts, and that candle premium was over $1 million. And that was on, it looks like, May 8th. And so, big spike there, and then the stock price is in blue behind it, and you can see that, or I believe that's the premium price. Sorry, the stock price is going to be over here in blue. But yeah, the premium had come down a lot, and let's see, does he have another post on this? It looks like someone added over $1.2 million worth of Peloton $10 contracts for July 2026 expiration back on May 8th as well. And so this, was just following up on this post, what doing Peloton. And so from this data, this is from the flow at 10 in the morning on the 20th. Let's see, the premium over here, $1 million, over $1 million. So looking pretty exciting there, bullish, as you can see. And this was, the big spike there. There was a $7 call for July 18th. That did, you see that spike up there, $2.05 million. And let's just see, coming back to this. And I just commented on that. Is there an inverse head and shoulders with an inverse head and shoulders for a right shoulder? Probably not, but maybe. And so, yeah, this is from TradingView where I charted this. You can see the left shoulder here, the head coming down here, and then right shoulder, and then another inverse head and shoulders pattern within that. And so for me, I don't hold any more Peloton, which we can look at in a minute. I'm not going over this in the order that I was expecting, but I'll do Peloton first. Let's see. The reason why I don't have a position in Peloton anymore is because whether it's the head and shoulders or inverse head and shoulders, those patterns don't always play out. I've definitely seen them fail a number of times or just take a lot of time to play out. And the number two reason is, personally, I don't care about the company Peloton. It's just not interesting to me. So, why do I want to hold that if I'm going to be red for a little while, hoping for a gain? And so, I just don't have the conviction that I need to hold this, so I am no longer in it. But we can look over at the chart and at the data to kind of see what's going on with Peloton. And like I said, this is from TradingView. I'm not going to pull it up because it's really just the simple inverse head and shoulders. And so what we can do, let's see, looking over at Webull, is I will pull up the Peloton chart. And so, yeah, I got a little bit concerned. I don't know exactly when I got out of my position, took small profits. Maybe I missed out on $100 or something. Looks like I got a 10% gain on my contract, which I can't pull up the contract here in Webull, but we can look it up on Unusual Whales. But really, the concern that I have with this is, on top of the not having a lot of conviction in it, is I'm wondering, or I'm worried a little bit, that there could be a bear flag forming here. And so one way to do that is by doing a Fibonacci extension, going up to, from the high to the low and then up to here and then taking a step back. That would be suggesting a downside move of around $5. Or another way that we can draw that out is I'm just going to do the distance from here. Just measured it out like that, and then, something like that. So that's basically that move coming down to like 509. So two ways to get that kind of measurement, that 100% Fibonacci extension. That's suggesting that Peloton is forming a bear flag. Maybe I'm wrong. Maybe it's about to break higher. All of this stuff in this video, I may very well be wrong about. So, take it all with a grain of salt. And also sometimes there will be a day where something looks really bullish, but then the next day things look really bearish. And it's just like the market's just jerking us around, trying to fake us out, shake us out before, the big move or up or down, whatever, ends up happening. But yeah, so for Peloton, I have a little bit of concern that it could be coming down to $5. And maybe that happens, by this date, which would be pretty close to now. I don't think that's necessarily happening now, but Peloton could be breaking down. And maybe I want to, I don't know if I can do it like that. Yes, there's a nice little arrow there. How cute. Okay, so let's look at the options data on Peloton. And so the one that I had traded was the $10 strike call that expires in January. So January for me is the contracts that I've been looking at because I like to have about 6 months between when I buy and when it expires. And I want to be out well before it expires. But now that we're in July, I'll probably be looking at contracts that are later into 2026, maybe going to the June contracts, maybe going to March. I'm not really sure. But this is the contract that I was holding, Peloton, and we can see that the average fill at the close, so on the 3rd, July 3rd, the average fill was 64 cents. And so I had sold, I believe I just had one contract at 68 cents. And so that's 68 cents times 100 shares per contract. And so that's $68. I got about 10% gain. And also with all of this, if you're not familiar with options, I'm not making these videos to encourage people to get any of these options, to any of these contracts. I'm just trying to use contracts as another layer of data to complement the charts, the stuff that I see there, to suggest whether there's bullish or bearish movement about to happen. And, trading shares, risky. trading contracts, very risky. So none of this is financial advice, as it does say up there, but especially with contracts, these are just ones that are appealing to me, but I'm sure that there are much better contracts to be holding. I just go with the ones that, have price targets that make sense to me. Like, for example, Bronx Viking was talking about, $10 calls for July. And so bumping this out to January, same strike, seems, safe bet to me. And then if we do look at the chart, why $10? I mean, it was at $10 over here in February, so earlier this year. So like I could see it going back up to $10. That's not an extreme, target. So all of my targets, they're kind of based on some loose form of technical analysis. But yeah, I mean, I got out of my position at 68 cents. And not holding it, not planning on buying it. Looking at the data over here, what we can see is net put premium in red going up, but then pulling back. Net call premium being negative, that's in green. And so it's, just thousands of dollars. It's not a huge amount. If I do expand this, we can, look back over the course of the past 7 days, let's say. And so something that does stand out is we do have some net call premium going up here. So it looks like June 27th, net call premium increased by like over 300,000. And then on June 30th, it increased by $500,000. Still, it's not millions of dollars. It's not screaming, there's this real nice trend going on. So this doesn't really stand out to me as being super bullish or, super bearish or anything. It just seems kind of like, this is not a clear signal. Also, you can see that the stock price in yellow went up as that call premium's going up. And it's also green volume, so suggesting buying of contracts. And then price tanks, net call premiums down. So this just seems like it was chasing momentum, not really, giving a signal that a big move is about to happen. And then if we look over the past 30 days, I mean, there's, big signal here. This is what we want to be looking for. Big signal here, up $1.5 million, $1.55 million on June 6th. And then following that, we see stock price in yellow pull back, but still $1.55 million. So it's like, is the move over? It seemed late, it's bearish, but then, let's see, the stock price here was like $7, and then it went up to $7.65. So it's almost like a 10% move in the stock price. And the net call premium, we'd have to see like, let's see. I'm just going to look over here. So that was, okay. Just thinking about this was on June 4th. So let's go back in time about 30 days. That's the most I can do over. Oh, no, I can do 90. Oh, I can do, yeah. So 30 days. Does this include June 4th? So June 4th here, we got this little spike in premium. And the average fill was $1.20, so $120 per contract. And then it pulls back to the low of 103, so $103 per contract, because $1.03 times 100. And so it's like, I don't know. And then there's a big move after that, goes up to 125. So that's more than a 10% move really quick. And then after that, though, it just collapsed. Then we see, this big buy order here, it looks like. And this contract, I don't know that it's going to be that significant. So let's just actually, because the contracts that I look at are like for little fishies. They're not for big whales. So there's not going to be a lot of like good data in what I cover or what I trade personally. But if we go back to, let's see, June 24th, June 24th, that's over here. There was a little spike, but the net call premium only increased by $400,000. So like nothing really there, nothing to be going on about. So I don't see anything if we look at the 1 day that stands out. And if we take a step back and look at the past 7 days, I do see something here that looks maybe a little bit interesting, but it's not a net call premium increase on increased volume that's more than $1 million. So it's not really getting my attention too much. So I still remain not interested in Peloton. But I guess before I forget, I do have the max pain over here. So why don't we look at the Peloton max pain? So for last Friday, it was $6.50. Where do we close at? Just above it. So that's good. But we didn't close strikes above it. So I don't think it's going to be like triggering a gamma squeeze or a gamma ramp or anything. Pretty close to max pain. This coming Friday, 650, and then it goes down to 650 again, 6. So right around 6 to 650. I think that this could be a bear flag and this could be coming down. The inverse head and shoulders patterns, maybe they're not going to be playing out, and maybe we don't see a really massive move to the upside because it just seemed maybe a little bit too obvious, and I don't have enough conviction to be holding Peloton. Or to be trading contracts right now, unless the data really suggests that something exciting is going to be happening. So I'm not going to be going over Peloton again unless something exciting stands out to me. And so with that being said, let's come back over here. And the next one that I'll look at, I think I want to actually look at QuantumScape. Given these factors, I estimate a 60% likelihood, and this is Grok speaking, that QuantumScape would raise capital following a 30% gap up. And so that did not end up happening. If we look over at the chart on QuantumScape, I had drawn these doodles suggesting that from the gap up, we could see a pullback and then a move higher, or I think I drew these at the same time. If it gaps up to here, then we could see a pullback and then a move higher. And so it's effectively hit that target of the 261.8% moves. That's Fibonacci extension 2618, around 760, having hit a high of $7.72 on June 27th. And so for me, this has just gotten like, it just moved up too fast. And so the contract that I was trading, I sold too early. I could have made at least $500 more, but that's the way it goes. I had actually bought this too early. The options data wasn't suggesting bullish moves. And so I just held it for a while, and I was happy to take some profits. And I took about a 65% profit on a contract or contracts that I was holding. And we can look that one up, which should be over here. That was the $10 strike call that expires again in January. And so I had sold at 51 cents, and we can see that the high just from Thursday was 104. So, I could have doubled, what I made on that. And let's see, I'm not exactly sure when I sold, but it went up to $1.52. So, I could have probably made $1,000 more on this, maybe, but, we'll see if it pulls back. I took profits, and if I continue to stack those gains, I don't think that's a bad thing. But, let's see, when did I sell? I'm not exactly sure. I don't think it matters too much. Oh, no, when did I sell? I know exactly when I sold. I sold on, June 25th when it gapped up. I exited my position, and so on June 25th, see, this is the thing. With options, I always, buy them too early, so I have theta decay, and then I get antsy about wanting to get out because I know that it could be going to zero. But I also end up getting out too early. And so on the 25th, even, the day before, on the 24th, for this specific contract, there was, an increase in open interest on the 25th that rolled into the 25th. On the 25th, so the day that I sold, 3,000 of these contracts were opened, the open interest goes up, and then it starts to go down. And so when I see that it starts to go down, you know, the low on this day was 85. So even if I would have sold then, I would have made more money. So I think it's good to, you know, kind of wait for the data to suggest whether or not something is looking good or bad. And, you know, I should probably mention why the $10 strike. And so it'd probably just be in a round number. This was 952 up here back in about a year ago, a little less than a year ago. 952 was the high. So that's kind of a target for that. But now at this point, we have seen, you know, big move up, volumes kind of diminished. So that could be suggesting that there is another leg higher once we get, you know, another surge in volume. But it also could be, you know, maybe starting to fade and to pull back. Maybe the data doesn't suggest that, though. And yeah, so what do we see in the data over here? I might actually just expand this so we can see it a little bit bigger over here. And the 25th, I kind of want to go back to that date. Let's see, does that is included here, June 25th, but if I go back a little bit further, so I'm just going to do 14 days, June 25th right here, so that didn't look too crazy, but from the days before, definitely kind of a change in, you know, what's going on over here. So the stock price down here, and then a gap up on the 25th, and then we have, you know, all of this data here. And actually, let's see, we see all of this and other things too, you know, all of this volume that's green as stock price and premiums going up, but then that was the top. And so then as this pulled back some, yeah, so, I mean, I'm not in this anymore and I don't plan it. Sometimes you get attached to what you're trading and then that can be kind of a bad thing. And so what I might do is go back to, let's see. I want to just look at, I'm just going to do 1 day and then we can go back in time over here to June 25th. So this is when I sold. June 25th. Let's go back. Yep, so this is June 25th over here, showing 2 days. This is the day before. And so, yep, we had net call premium actually coming down on the 25th. So, you know, there's people like me selling. But then let's see, I'm just going to go forward 1 day. And so we can see from June 25th over here now that continued, you know, with this going up. So net call premium was up on, you know, what day is this? This is June 26th here, so the day after I sold. Net call premium increased by $9.38 million. So looked, you know, really good. That's when I should have sold. And so June 26th, you know, if I would have just sold at, you know, for, let's see, 1 day. I don't think I can adjust the time back on this chart, but just like June 26th, I was 152. If I would have done 100, $1, you know, I would have made a lot more money. So I think it's really good to be considering that, to not be getting out too early, because I tend to do that, but I also tend to take profits and not hold the bag after dilution. Dilution didn't happen. Raising capital didn't happen with QuantumScape. So, you know, good lesson learned there. But yeah, I mean, let's see. I mean, I'm just going to spend too much time on this, and this is a trade that already happened in my view. If I just look at the 1 day over here, this is what happened on Thursday, so on the 3rd. And, you know, I can also just pull it up over here, but I'm just going to do the current date. So the 3rd, July 3rd, we see these big spikes in net call premium. And so net call premium before this spike was around $68,000, and then it spiked up to about $400,000 higher. And then over here, this was around $330,000. And then it spiked up to around $950,000. And so those are some spikes. This, with all this volume behind it, does make me think that, hey, there's something going on here. So we could actually look at the flow. Oh, and also I should note too up here, Friedrich Prinz, is insider sold on the 3rd. So maybe that's something to be concerned about. But we see this spike here, and that was around 11 a.m. So we can look over at the flow, type in QuantumScape, and I'm just going to do the time range for July 3rd, apply that, and I'm going to set the premium. It's behind Ed's head to $100,000. And so we can see at around 11, this is what I'd be looking for, was a $7.50 strike that expires this coming Friday. It looks like that was bullish. It was about $236,000. The size was larger than the open interest. That's why it's purple there, I believe. And so we can look at this contract by clicking on it. And so that is this coming Friday, July 11th, $7 call. Looks like it was on the ask side. And so I got 30 days over here. Let's just look at the 1 day. We do see this spike, about $250,000. And that does look, in my mind, like that this was a buy. But it's not $1 million. It is $750, which is above current price. So QuantumScape could keep moving. So yeah, and like the volume on the 3rd was 14,000. Can't see it because Ed's in the way. But the volume was 14,000 when the open interest for Thursday was 2,000. So that's well above the open interest. So I might actually just post this onto X and just say recording a video. This looks interesting. And so I'm going to copy that, and maybe I'll just, let's see. CX, that's not what I wanted. There we go. So I'm going to say 250K on a $7.50 call expiring this Friday. I think. Yeah, we'll do QS here. So yeah, I'll just post that. And I find that to be interesting. Well, because I'm thinking, was that, bought to open? Or sold to open. Sold to open. I don't know if that's covered. Or I'm not even going to write it like that. Or a covered call. Bearish. Yeah, I don't know. Let's post that. And yeah, I'm spending too much time on this, but I do find that interesting. I don't find it worth the risk. Looking at the chart, 750 up here. I mean, it could be going higher. I don't know. I'm not in it. But I do need to continue on to the next one on the list, which I was going to go over initially. This is Webull. This is one that I was in. I did take some profit. I did take profit on it. I'm actually holding one share. I basically go over my thesis here on X, so I'll just scroll down to go over that. And so, I got, Bull max pain has moved up to $12.50, which price is well above now. And so let's look over at the chart of Webull. 1430, very high up, but it does look like it's putting in a topping signal because we got this big moves up. And this is actually, and take a step back, this is something that I need to get, I recognized it, but I wanted to manage risk. Taking profits for me, I think, is much more easy to do if it's thought of as managing risk. And so Webull had moved up. I was in the green, starts to consolidate, and volume's still increasing. So I was thinking, well, volume's still increasing, but the spread of the candle isn't very big. That's not really a good sign because it's showing some divergence. But volume is still, the trend is still increasing. And so this did continue higher. So I could have held, I could have made more money. Hey, fine, no big deal. But I wanted to take some risk off the table. And I wanted to observe this. I wanted to see this happen because whenever there's a big move and there's a little bit of consolidation like this, I've noticed it does tend to go higher, even though I do start to see this kind of divergence. So that's a good thing for me to note. It goes higher, and then we see a lower spread candle with higher volume as it's starting to pull back. And actually it closed at 1430. What was the high over here on the second? The high was 1430, so couldn't really close above that level. And now it's gapping down 6.78% in the after hours from Thursday. So, it is what it is. And, continuing on with the reading over here, which price is well above now, above that $12.50 max pain. So gamma ramp squeeze could be in the works. However, that max pain could be acting as a magnet with today's high of 15.15 so far. And so we can see over here, 15.15 was that high. I did this Fibonacci retracement. And also because I did mention it, let's just look over at the max pain for Webull. And so it was 12.50 for Thursday. And now it's 12.12, then 10.50 for a few Fridays from now. But for this coming Friday, it's 12. And so looking at this, just continuing on here. So for the most part, I am out and I'm holding one share. As I'd mentioned, my average is $11.59. And I don't intend to increase my average. I will welcome a retest of the 786, which is in the screenshot here. And that 786 is at $11.24. That would be below my average. I've got an alert here at 11.50. Going below, so then, hey, I'm going to pay attention to it if it does go back below towards 11.50, below my average. I don't think I have a buy order placed. Maybe I do. I need to check. I don't really need to have a buy order placed. I can just have the alert and then reassess when it goes back there. Because if it pulls back to below my average, hey, I could get my average down, but if the unusual whales data is bearish, if it's not showing anything bullish at least, or bottoming, then I'm just going to be accumulating and wasting time well before a move. So I just have the alert set down there, but I'd be happy to get my average down around there if it does pull back. But maybe it doesn't pull back to there and it starts to show some bullish signs. I'm paying attention to the chart more because I have one share, and then maybe I want to get some contracts, so I wouldn't be adjusting my average. And so, like I said, I will welcome a retest of the 786, but will also happily hold that one lame share without any emotions for greater than 1 year, getting away from capital gains tax, all of that. So I think that's good, long-term capital gains tax. I think it's about 10% versus about 30%. And so maybe I'll swing some more contracts if things cool off, but right now it's too hot for me. You do you. I sold too early, and I'm glad I'm not rugging anyone at the top. That's something I forgot to mention at the beginning. Part of the reason why I am going to be probably selling before the tops is because nobody's ever going to time the top, and because I'm making content on this stuff that people may not I don't want to be rugging people effectively. I want to be dumping. I don't want to be pumping and dumping or giving the sense that that's going on, because it's not. This is really just like me documenting my learning process and hopefully it's helpful for you guys. And so, I don't want to be getting greedy and wanting it to go $1 higher and then get rugged because of a dilution announcement or a capital raise announcement. And so I'm not getting greedy and I'm stacking small gains. So that's kind of my plan. And yeah, I mean, we are seeing this now. If we look over at the 10-minute chart, look at that. Let's come down to that green line, basically 1340. And that's actually, what sparked my interest in this chart. I saw multiple people talking about Webull on X. And it's like, well, hey, I'll look at the chart. And I noticed, hey, it's coming down here to this level at like 1340, which looks like, it was the high over here. And so maybe that could be acting as support. It did briefly, but then it broke below. And then I looked down here for these like consolidation lows around $11. Maybe that could be acting as support. And so I did add, and I did get my average down, but I got in too early because I wasn't looking at the options data. And I think that's really important to do. See, I mean, it broke below that yellow line, came down to a low of 1018. And so that's when I should have been looking at the data. And so this was June 13th. If I scroll down here from my Webull postings, this is, the lame profit that I took. I ended up making about $100 on it. Really not that exciting, but it's all about exercising that discipline. And so let's see. Okay, this was more recent. There's one post from, I believe, the 16th, coming down here, June 16th, June 26th, June 25th. That's when I did a video on it. So on the 16th, $8 million increase in bull put premium could be associated with selling cash secured puts to collect premium and a bullish bet on it being above $35 by November. Buying such deep in the money contracts would make less sense. And that's kind of, I think, what I had initially posted. $8 million increase in bull net put premium on Friday at most premium over the past 30 days. 3.3 million on deep in the money puts. Nearly 6 million on deep in the money leaps. And so one thing that we should notice with this is that the volume here is red. And so that's suggesting that, puts are going up, but the volume is going down. So it means it's likely that these were sold to open, selling cash secured puts, suggesting that the bottom is in. We can see the yellow is the stock price. That's at a bottom. You don't want to be, this is just the one day, but this is a bottoming indicator. And so that was on, sorry about this, on the 13th. When it hit 1018. So it looks like bought, okay, yeah, because somebody posted PC stocks. Thanks for posting this because you really got me thinking, sold to open or bought to open. Looks like bought to open with premium because premium was going up here. That was my initial thought. And open interest both increasing because from, let's see, the 13th open interest increased by about 1,000 contracts. I suppose I could be wrong, though, as selling cash secured puts to collect $9 million in premium. However, having the cash to secure the puts would be around $12 million. What do you think based on the screenshots and my rationalization? I guess I didn't follow up on that exactly, but I did, put premium could be associated with selling cash secured puts. So that was kind of the evolution there. It happened on X. And yeah, I mean, that was the bottoming indicator that I needed on June 6th. Not, I mean, we can see going back in time, when did I, May 14th, when I was realizing this, was that June 16th? So yeah, a month wasted. Because you got to look at the options data. There wasn't any interesting options data until June 13th when I was posting about this on June 16th. That was the time to be accumulating. So like June 13th over here, oh my gosh, that would have been the time to accumulate. So let's say you get your average at $11. from right around here up to here, 33% move in the span of a few weeks. So not wasting a month acting on the options. But yeah, let's think about the options here. Let's go with the contract lookup for the Webull. Let's see. And there's another one that I wanted to look at that I think there was some data on it that I can maybe go over as an example, but the video is now about an hour long. I've got a number of other tickers to go over. And I can't be spending my entire day doing this. But yeah, this is the contract that I was holding. I sold at, let's see, 90 cents. That was an 80% profit for me. And this contract, hit a high on Thursday of 150. So, I could have made more money on it. But if I would have held over the weekend, those contracts would potentially be going to zero. Why did I pick $30? I should probably mention that. I mean, 30 seems pretty reasonable. Probably associated with this Fibonacci extension that got moved, or Fibonacci retracement. So I'm just going to adjust that. Should be from the high here, $79.56, going to that low of 1080. So let's see. What was that high? 7956, 7956, and then 1080. And I'm going to lock that into place. And so, because there was this 236 retracement to the upside, just shy of 30. So, that seemed reasonable also, the gap up here to around that level. So it seemed reasonable. Also, I had this gap drawn up here at like around 1641. That seemed like it's kind of a lure to get people, I wanted to fill that gap. But what did I have drawn here? That it might come up to around this orange line, form a bull flag, and then go higher to fill that gap. And so I think that's maybe what we're seeing now, pulling back to 1333 in the after hours on Friday. Maybe this could be coming down to 12. I'd still be in the green. If it comes down, that's the 618, 1207. But if it comes down lower to the 786 around 1124, I'd then want to look at, does options data look good or bad? And then maybe I consider either buying more shares or getting some contracts. And so looking at the data for all of Webull over here, I'm just going to expand this, I guess. We can see that from Thursday, we saw selling of calls came down by $1.15 million. Net call premium in green coming down as the stock price was coming down. Net put premium more or less flat. If we go back a couple days, we can see that net call premium had increased, but only by about $750,000 net call premium increase. If we go back 3 days, we can see that net call premium had increased over here on July 1st by just shy of $1 million, $937,000. And so that, kind of makes me think, well, net call premium still like right around $1 million, but then it starts going down over here. Maybe this is time to sell on the 3rd at the beginning of the day. And that does seem like that's what's happened. And that seems like that would have been a good decision, selling at the start here. So then looking at that contract, let's see, I guess I'm just do 2 days here. That premium at the end of the day would have been around 119. I had sold at like 90 cents. So I could have made more. I could have made more having held into like Friday. 140 about was the high. 150 was the high on Thursday, I should say, Thursday, the 3rd. But, then that's getting into greed territory, and it's going to be pulling back a lot now. So looking at this, let's go back. I can't do 4 days, so let's go back 7 days. And we can see that, net call premium was down here. Then it starts really going up, $1.33 million. Then it actually comes down to sub 1 million. And then it comes down even more. So this was 937. And then over here it's 746. And so, this is kind of suggesting that the top is in. As stock price in yellow is going up, this is the time to sell. I sold a little bit early, but I didn't sell too late. And that's the key. to not sell too late. And so I didn't do that. So I'm proud of that. I'm taking notes. I'm learning from my mistakes. And I will miss out on, right now, hundreds of dollars. Soon, hopefully, I'll be missing out on thousands or tens of thousands of dollars. And if I'm missing out on tens of thousands of dollars, that means I'm making a good amount of money because I'm taking advantage of these moves. So I feel good about that. I think I made the right decisions. We can look at... yeah, I mean, I think that the move is over, and I'm really not going to be paying attention to too much until this starts to cool off. And I mean, I will still check it every day. So yeah, I mean, what would I be checking? I would be checking max pain. I already went over that. But yeah, I mean, this to me is just, it's not screaming anything. It's not telling me anything's going on. Net call premium down over $1 million. So yeah, I mean, I think that this is going to be coming down to at least 12. So I would be prepared for that. But maybe I'm wrong. Maybe this move gets adjusted like that, and then it just comes down to where it's at now. But I suspect it will go lower. I think that there'll be a gap down and a sell-off. So yeah, so that's kind of what I wanted to go over. Maybe I'll go over, oh, this is the older post that I had gone over. But yeah, I mean, that's why I think that like following me on X is probably going to be more valuable than following me just on YouTube. You know, I think it's good to do both. But so this is from June 30th. Just look for the bull November. Oh yeah, I didn't see it, but I saw like a number. There was a little bit of miscommunication, 30, 35 between us. But it got me looking for other contracts, and you know, just like millions of dollars, cash secured puts, effectively betting on the Webull price going higher. And yeah, so I'm not going to spend too much time on that, but I think Webull is going to be pulling back. So I've gone over QuantumScape, I've gone over Webull, I've gone over Peloton, and so you know, this is QuantumScape, Peloton over here. And then the next one is going to be Intel, which, to be honest, I would say is probably, of the ones that I'll be covering here, I think that Unity Software and Mara are probably going to be a little bit more exciting. But Intel, I did see, like I was posting this on July 1st, Intel net call premium up by about $2.5 million so far today, now trading right around $23. And so we can see the net call premium around $2.47 million at that time on July 1st. But, you know, I think that these things, you know, it's like it looks really bullish one day, and then the next couple of days, maybe it looks bearish to shake people out, for people to lose confidence, and then the move happens. And so that's really like the last post that I had on Intel. And so I guess I'll look at the chart real quick. And then let's see right here. And yeah, I mean, this is kind of played out as I suspected, that, you know, I do think that it could be coming down to 21. Actually, I think I had a post about that. People were impressed with my post on it. So that's kind of cool. So I will scroll down and kind of go over here. This is again on July 1st. So it looks like about 3.4 thousand $22 strikes that expire in September were sold yesterday. And considering the average fill of $2.32, that's a withdrawal of around $800,000. So I don't know if the average fill we can see down here, $2.32, multiply that by the 3.4 thousand, and that ends up being around $800,000. And so, you know, after the stock price rallied up, which is the yellow line here, that makes sense. So I'd expect a pullback. And so my doodle suggests, as I was just mentioning, that pullback to 22, but moving averages and the 50 to 6D1.8 or 618% retracement suggests $21 range. So that's over here. And so quite the possibility. It did pull back here. It probably, I would imagine, bounced following that red day. And then that was the opportunity to exit. at around 23. And then this pulled back. And this is going up now. But yeah, 22.43. What was I saying? Yep. Anyways, it did pull back. And let's, we want to look at the max pain on that. So Intel closed at 22.49. What was max pain? Intel, INTC, max pain for Friday was 21.50. So closed above it, 99 cents above it. So I think it's good. Closing multiple strikes above it. So if the strike is 21.50 and then closing above 22, nearly multiple strikes above it, I guess. But, with that strike at 21.50, strike at 22, closing above that. So I think that's good. And then, upcoming week, 22 for the 11th is the max pain. And then the week after for the 18th, which is the monthly, is 21. So I think that's, good to be considering that this could be coming down to 21. And so my average for Intel as far as shares go, I think I have 4 shares at like 19. So I'm not planning on getting my average up. And so I'm focusing more on contracts. And the contract that I am holding is the $50 call that expires in January, $50 strike call that expires in January. That's 17 cents per contract, or $17. And, the reason why $50, let's see, probably just because, the highs over here, that yellow line, that was from the end of December of 2023, $50, sure. It seems reasonable to me. And so let's just look at the contract over here. This is one that I am holding. Not to say that it's a good decision. I have no idea. To be honest, I don't really see much data that really suggests that this is going to be ripping faces off. I'm just going to close these other tabs so we're not too cluttered. But yeah, just to expand this. And so from a few days ago, I believe 3 days ago, I was seeing, hey, 2.5, 2.7, close the day over here on June 1st, 2.46 million increase net call premium. So that's looking good. That's also on increased volume here. And we can also see this spike in net call premiums going up right there. And I believe that is going to be illustrated in what I showed here. So yeah, right there, that makes me think, well, there's, going to be a big buy. That could be suggesting, what's going on, that we can look at that contract and see if those contracts were being opened or closed or whatever, to look at the exact data. And so that's from July 1st. And so coming over here, we've got July 1st over here, but I'm actually going to filter this back to July 1st, and then I'm just going to do the 1 day. So we can see the higher resolution data, and we can see that right around 10:17 in the morning on July 1st is when we started to see that increase. So net call premium was at negative $32, effectively zero. And then it jumped up between 10:17 and 10:24. It's now at $1.43 million. That's more than $1 million increase in net call premium right there. So that does make me think that this is good, that this is looking good. And so I'm going to want to come over here to look at the flow. I was looking at QuantumScape most recently. And so I'm just going to reset the filters here. And I'm going to type in Intel so we can see what's going on there. I'm going to adjust the time range to just be July 1st, because that's what I want to be looking at for that specific contract, whatever that order was. And then I'm going to filter this to, let's see, $100,000 right there. And we can see that I was saying around, was it 10:17? Yep, 10:18 here. We started to see some calls being bought. Presumably, this looks, you can't see it, but it says bullish over here. This is the $25 call that expires in December of 2027. So almost 900 days between now and expiration. So a leap very far out, $25 strike. It's an in-the-money call. I mean, this could be, selling covered calls, so good to look at that. And so let's see, what's the premium on these? Like the highest premium that we see over here, what I see just from scanning it is this $570,000 order here. And so that is for the Leap. So it's not too far into the future. And then we also see these puts here. This is for the 18th, 26th. So that might be another one that we want to look at to see, were those being sold or bought. 26 is an in-the-money put, and maybe that's, a bullish indicator. But yeah, let's first look at this one that has the more than $500,000 on it. So this contract is the $25 call. Expiring, like I said, December 2027. And on the first, over here, we saw a volume of 2.8 thousand contracts. And then we saw an increase in open interest of about 1.8 thousand. Open interest going from 5.7 thousand to 7.5 thousand. But then we actually saw it, sell off the day after. So it went from about 5.7 to now about 6.3. So it's not like a huge change. So that doesn't give me a lot of confidence. But we can see, looking at this contract, going over the past 3 days, because that's really all that we need. We saw these big, buy orders around 10 to 10:10 to 10:20 in the morning, big buy orders. But then the next day, maybe it looks like, there was some buying, some selling. I'm not really sure. So this is just not like really a clear signal in my view. If we look at this data over the past 3 days, we could see this, but then that net call premium just came down right after it. So this is not really, screaming super bullish or anything. So, but we do have this data here. We've got 123,000. This is the $26 put expiring in, in a couple weeks. So not this Friday on the 11th, but the following Friday on July 18th. So let's look at that. So on the first, we saw an open interest of about 3.9 thousand and a volume on that day of about 400. And then we actually saw, it looks like selling of those puts. So that could be suggesting a bottoming signal that somebody who had puts was selling them to take advantage of that premium. And so if we look at the data over here, let's just go back like 30 days. That premium, or that's the stock price that was up actually. So it doesn't really make sense. If we go back, 30 days with the data over here, this seems more like, if we go back, this was, on the 26th, open interest was 3.5 thousand, and then it increased to 3.9. And but it hasn't really been that big of a change. So with Intel, I'm not really seeing anything that jumps out as being super bullish or even super bearish. I think I might have just been, seeing that, noticing, something going on, but it just not being a super clear signal. And we also got this other put that is the $21 strike put. So that is currently in the money, and that's $100,000 there. So let's just look at this. So from the first, it looks like that put was opened. So maybe this is a little bit bearish, and that does suggest these two puts. You can't see them because they are behind me, but this does suggest, bearish over there. So I don't know. I feel a little bit on the fence with Intel with this contract. I'm not super bullish. Stuff's not really screaming out at me. So, this was just kind of something that stood out at the time, but the data that's followed, not really that exceptional. So with that being said, I'm going to continue on to the next one, which is going to be Mara Holdings, which was formerly known as Marathon Digital. And so this is just kind of a response that I had here. I think relating to Bull, and then I was saying, and I am wondering if Mara will be the next big winner. I actually think Unity will be the next big winner. It had a nice run the past couple days, and will be interesting to see what crypto does over the long weekend and how that relates to miners on Monday. And so I'll cover that in tomorrow's video. A couple days later, sorry, this is that video. But on July 2nd, I had posted, guys, I think I got a rocket in my pocket for Mara, because she just closed the day with $8.73 million increase in net call premium, and it clearly broke above yellow resistance, which I'll show in the chart here, but now at white resistance, which you can actually see there. So inverse head and shoulders, anyone? I'm thinking that this is looking like a foxy lady. And so this is a screenshot from when I was at work. I took it on my phone from the Unusual Whales app. And, after closed $8.73 million positive. So that was looking really good. And, that it had broken above the yellow resistance there, but was getting into this white trend line. So maybe, it's at resistance now. And the next, is just that GIF. And so let's see, I think I had posted something else over here. So on July 2nd, so, this was probably when I was at work, Mara net call premium, no, this is not when I was at work. This is before I went to work. So net call premium has been greater than $1 million the past couple of trading days. So looking good there. However, it is below long-term yellow trend line. I was just talking about that. And, then it's broken above to be around here. So that's good. Going back to that trend line is based on 2022 lows, which I illustrate here in this screenshot, that yellow trend line. These are the 2022 lows, also the lows over here. And so I could see basically, maybe it coming up to like 21 seems like a likely target, and that is based on that red trend line that is there. And so currently trading just above max pain, so very interesting. So the max pain for Thursday the 3rd was 1550. And so let's flip over to the max pain over here for Mara. And to look at that, it was actually 16. It had gone up. What did we close at? Mara closed at 1766, so multiple strikes above, and so how do I know it's multiple strikes above? If we look at the options data, this is showing for July 11th, so it's not from last Friday, but if we see the max pain, with $16, how is this, how are these options? $16 is here, and then 1650 is the next strike, then 17 is the next strike, and then 1750 closed multiple strikes above. So it does seem like a gamma squeeze or gamma ramp or gamma ladder, gamma ramp could be going on. These are calls, I'm just making sure. And so, this could be seeing some big moves, but that's also going to relate to what's going on with Bitcoin. And so I'm just going to pull up, let's see, TradingView here. Fartcoin, dang it. It's embarrassing. Let's just pull up Bitcoin. I'm going to do that. Coinbase. This is stuff I go over. Crypto Corner Stat Stacker every Saturday. Try to go over crypto. And it's really just been kind of consolidating up here over the weekend, still around 108, 109,000. But this to me kind of seems like, there's this downtrending resistance. We moved up, kind of got rejected from there, pulled back, then moved up, and then been consolidating right around that level. Could be forming a bull flag and then moving higher. And so that would be, bullish for Mara. And with max pain still at 16 for this coming Friday, the 11th, and then down to 15. Maybe that 15 ends up being kind of a magnet later. But right now, I think this is looking like, what could happen is maybe this rolls over, then pulls back to find that yellow line as support, and then it goes up to around 21. So, that's kind of what I could see happening. So good to not be chasing. And also, the thing to note, I was comparing, or I was thinking about Webull actually. So let's look at the Webull chart here that, there's this big upside move and then increased volume with a low spread. There's some divergence there. That got me antsy. But then we did see a big green candle following that with, again, increased volume. And now we're seeing red candle, increased volume, and then we're going to see a gap down because they raised some capital. And so Mara, we see increased volume, but now lower volume with a lower spread. So there's no divergence there. That makes sense. But maybe this doesn't suggest a continuation. Maybe this actually suggests a pullback before the next move up. So I could see that. I'm kind of bracing for that. And that's one of the reasons why, I think that this pulling back to around 1640, 1650, that could be happening over the course of the next week or two. So good to be prepared for that. And if it does pull back to, what was I saying? 1650, that'd still be above max pain. So that could still, get things going to the upside. So good to be, considering that. And so looking at the contract here, the one that I hold is the $50 strike call that expires in January. Let's see, why did I pick $50? Really just because in the last Bitcoin bull cycle, like 4 years ago when it was topping, Mara then hit like $80. So that's like over here, this was 4 years ago, November 2021, when Bitcoin was topping. And so if Bitcoin is to top again in November, I think that Mara could be, going up at least towards $50. But I would probably personally be taking profits on that contract well before. I don't know exactly what my, profit would be or what my average is. I'm not going to pull it up because this video is getting too long. And I don't really think that's important. What I think is important is that the possibility of a pullback to around 1650 should be, considered. But if that does pull back and find support there, then I think that would be a really good thing. It'd still be above those max pains, although those max pains could be increasing. But generally, I think that this looks good. What we saw in the net call premium for, all of the contracts, so I'm just going to expand this. We can look at it in a little bit more detail. So on Thursday, we saw a net call premium increase. That's the green line, the net call premium increase on Thursday of $2.8 million. So that's looking really good. We also see this spike here that we could look at that contract specifically to really see what is going on with that data. And then we can also look back, let's say the past 3 days. We can see that net call premium on Wednesday increased by $8.73 million. And so that is, what I was talking about in this post over here, I'm thinking then that's looking pretty exciting. Inverse head and shoulders, anyone? What was I talking about with that? That's, I would think, kind of, something like there's the left shoulder, here's the head, coming back to that white neckline, and then here's the right shoulder is kind of what I'm thinking there. But I'm going to just make this purple so I know that that's like the neckline. And we're back there, but we haven't broken above it, so we could be seeing a pullback. So good to consider that. Good to keep that in mind. And let's just come back to the data over here. I did want to dive into, actually, I'm just going to do 1 day, and I'm actually going to go 1 day back in time. So here with that 8.73 million, what do we see here? We see a spike net call premium at around 316, around 6.5 million, and then it spikes up to about 8.3 million. So that's a pretty big order. We do see volume increasing corresponding with that. So that's pretty good. So we'll want to look into that. We'll want to dive into that contract just to see what's going on. And so I'm just trying to think about how I'm going to look at this. So this is from July 2nd at around 3:16. So let's look at the flow. I'm going to reset this Mara over here. And I'm going to set this time range to just be the second, just to filter that. And I'm going to set the premium to $100,000. It actually seems like there was a lot, so maybe I want to just filter by 1 million. And then around 316, maybe actually, I don't want to do that. Let's see, I was looking over here. That's around 316, 317. Yeah, so I don't want to do 1 million. I'm just going to filter by, let's see, 500,000. 316 is what we want still. Oh, 316, I'm an idiot. I was looking at 13. It's military time. I prefer the 12-hour clock, but sometimes I get confused because I'm an idiot. But yeah, so 1 million. So 15, 17, that's 317. That's what we want to be looking at. Man, look at this. $1 million orders on the second. And so this one is the 1.77 million, the biggest order for the day. That is for this coming Friday, July 11th. It's a $16 call. Currently above that strike. So that's looking pretty risky. And what we can see the past 2 days, we can see, that this is corresponding with the big spike there. And we see this big spike, multiple big spikes actually, of this going up. But if we look at the data down here, this is what's important. So we saw the open interest on the second. So before these orders were, on the table here, we saw an open interest of 29,000 contracts, but a volume of 20,000 and open interest coming down by about 11,000 contracts. So this is actually not so good. This is suggesting that a top could be in. And yeah, so I think that this is actually not such a good sign because that open interest is coming down. But it's also like there was a big move and the expiration is, on, 5 days from now. So you don't want to be holding contracts to the end. So I think that this is actually not necessarily that bearish. I mean, I think it's kind of reasonable. And if we escape this, what is this little doodle here say? The trade is part of a multi-leg option strategy. So that's very interesting. I don't really explore this too much, but if this person is still bullish, but they're a little bit concerned about, that expiration looming, so let's see, let's look at this. Okay, so this is that data, possibly related multi-leg trades here. And so this is the $16 strike call that's coming up in 5 days. And then this is the Mara $12.50 put that expires in 5 days. And so what it seems like happened here is that, and we've also got more stuff down here. So this is pretty crazy. I am not used to looking at stuff like this. So, oh my gosh, this is like super cool. This is like why Unusual Whales is really awesome once you get to, learn how to use this stuff. And to be honest, I haven't really learned how to understand multi-leg trades that often. So I'm just going to try to walk you through my thought process here to try to understand it. So we've got, calls and puts that expire in 5 days. And then we've got, just extending it out. So potentially like rolling the contract. This is a $19 call. Oh my gosh. This is so cool. Because, what seems like it's happening. So this is on the 3rd. And I want to actually put this back on the 2nd because that's when these orders were made. So why am I seeing the data for the 3rd here? I want to see the data. Okay, so this seems like My impression is that, oh, this is so cool. This is so cool. I just have to say, I don't know that anybody's actually like watching this part of the video because it's now an hour and a half long and I get to rambling and I think I lose people. But this is what it's all about. It's about looking at data, getting excited by it. And so what I see here is like, well, maybe they've got like, I don't know. So this is just like the put with the $12.50 strike. Current price for Mara, well above that. And so if they've sold a cash secured put, maybe they bought it back. Cash secured put. And then, sold one here at a $15.50 strike. And so this is actually kind of, I've been doing this with, actually, I don't know. Maybe I don't know exactly what I'm doing. But so I know an example of what I'm doing may not be the best. I was thinking about like selling covered calls, and then I just roll them every week and I try to increase that strike. And so, what happens here for this one is, candle volume. I'm going to do the math on this. I'm going to pull up the calculator. And it doesn't need to be scientific. We don't have to get scientific about this. We can be basic. And so I'm just going to clear that. And so this candle volume here, $8,000. So $8,000 there. And then this candle volume here, $9,000. Let's just round 9.3 thousand. So plus 9,300. That equals $17,000. And so then we come down here to this candle premium. Oh my gosh, 240,000. Yeah, so I don't know. Yeah, I was thinking that the numbers would be more similar, but this candle volume is like 240,000. We'll want to look at that contract because that is, and this is also, no, sorry. It says the third over here, but we're looking at the second data here. The third's over here. Nothing going on the third. But it's like 240,000. So that's a lot of money. And so this, with the expiration coming up, I don't know, maybe we want to take it with a grain of salt. I don't know. But maybe, it's like, actually, let's look at, that's like, what do I have in the calculator? $17,000. Let's see what the premium is over here. This is $1 million. Ooh, $1.7. It's like $3 million all right here. And then over here, this is the 19 strike call. Also 12 days from now, just like the one over here. This is the 15.5 put. This is, 500,000, 588,000. So, we got to look at this data. And the nice thing about these trades being on the second is then we can see how open interest changed on Thursday, because this data, the second, was on Wednesday. So we can see that. And so this is like super, super cool. I have to say, I'm just like really excited about this. And so, I'm just trying to think about how I want to look at this. So over here, I just have this one that I'm holding, but I'm going to want to look at those other ones. Have them over here. So let's just come back to the flow. All of these are up here. And so maybe what I'm not exactly sure how to do this, but this is the, $1.77 million. That's the one over here. Let's open that up. And I'm going to add this to a watch list, and I'm going to do to bookmarks. Okay, and so we can see with that the open interest came down. So that's going to be bearish, but that could also be just managing risk with the expiration coming up. And so, okay, I wanted to look at this multi-leg trade here. And so the other call is going to be this one, the $19 call strike that expires in 12 days. I've talked about this. And so that's the one right here. So let's open that up. And this one increased open interest. So that's good. It's not, millions of dollars, but the other one was like taking profits as Mara didn't really move up. So that was kind of like too early. But yeah, I want to add this to watch list, bookmarks. And so that's going to be good. And then I'm just going to escape this, go back to the multi-leg. And then so I want to see this $12.50 put that expires this coming, let's see, Friday. So open that contract up. And I want to add this to the watch list. But what can we see? Okay, yeah, these are being sold. So that's bullish because, and it's really just like managing risk. Open interest was 18.5 thousand contracts. Now it's 13,000. So it's just managing that risk. And yep, let's just add this to bookmark watch list. And then getting back to that multi-leg strategy, we can see this contract, the $15.50 put that expires on July 18th. That's this one. Open up that contract. Open interest increased. So it's like, they're betting on it going up, also betting on it going down, and then they're rolling those contracts and they're making money on it. It's kind of, how I see it, but maybe I'm wrong. And they're not letting those expirations get too close. So I'm going to add this to the bookmark watch list. And so we can just come back over here. I'm going to refresh this. So now it includes all of those Mara contracts. And so we can see that, this is the $50 one that, I hold. It's not too exciting. But if we just go back 2 days, we can see that the call, the $16 call that expires this coming Friday, saw a decrease in open interest. And we can see, let's just do some basic math, that the average, fill was $1.68 times 100 shares per contract times, the decrease in number of contracts. And that's a withdrawal of about $2 million from this contract. So that's like taking profits. And then if we look at the other call, that's 19 strike, July 18th. Let's, so 2 million, that's an easy number to remember. But we saw an average fill of 60 cents. Well, I'm just going to do 60 because that's 60 cents times 100. And then multiply that by the number of contracts that were open. 60 times 9,698. And so that's like over $500,000. And that's going long. So it's still a lot of money. So like take $2 million out, put $500,000 in, manage that risk. So that seems reasonable to take $2 million out to manage that risk, but to continue to risk $500,000. Okay, and then so as far as the puts go, what we can see on this is that, the average fill, which is kind of crazy because puts, they're not worth anything because price is well above. But this was also carried out on the second. So, like looking at the chart, this is like when I was posting that, or no, this was on the second. Oh, yeah. So with that big move. And so they're probably just like, well, this is not going to be, closing in the money. Definitely not. $12.50 put. So I'll buy back these, so sell these puts to get an average fill of like 1 cent. I'll get the calculator back. And so 1 cent, that's times 100, that's $1 times the change in open interest, 5,515. So it equals that amount in dollars. So taking 5,500 off the table to then risk on this $15.50 put. And so got about 5,500 here, easy to remember. And then over here, the average fill on this day, or actually what, I think I might have done this wrong. Yeah, it was still 1 cent, the average. And so the other put over here, the average fill on that day was 28 cents. So 28 cents times 100 is $28. And let's multiply that by 10,060. And so that's like 281 million or 81,000. And so like, I mean, if they had 2 million on the table with this contract, the $16 call that expires this coming Friday, and they take 2 million off the table. So I'm actually going to note this down. So I just have math in front of me. 2 million, numbers in front of me, 2 million. And then with this contract, then I'm sorry, I'm going to do the math again. But it's $60 times an increase in 9,698. And so that's, I'm going to subtract, 500, I'll just do 80K as, from that I wrote 200 million. I meant 2 million. 2 million. And then so 580 subtracting from that. So let's just do 500,000. So it's like they've taken out $1.5 million. And then with this other put that they sold, they basically didn't get anything for that. They got about 5,000. So that's like nothing. They didn't get anything for that. But then this one, they are, let's see, $28, was the average fill in the second, times 10,060. So 280. So basically, what I'm seeing is this is about 300,000. The other one was about 600,000. Let's just round that up. So let's say that's $1 million. So they basically taken $1 million off the table while leaving $1 million in, but extending the expirations to the following week, whether that it's coming down to $15.50, which where it's at now, that could happen. I talked about it coming down to like $16.60. So that's feasible, but it could also be going higher. And I think that they've bet more on it continuing to go up because they have about 500 to 600,000 on the $19 strike calls that expire a couple Fridays from now. And then they have about 250 to 300, on the $15.50 puts that expire in a couple weeks. So that's what they still have on the table. About $1 million, but they've taken $1 million off. So, but yeah, I mean, they're like 75% betting that this goes up to 19 and like 25% betting that this is going down, or maybe it's like 2/3 up, 1/3 down. It's kind of how I see it. This is like huge ramble, huge tangent, but yeah, I just like went over a bunch of these contracts, not including this spike here. So we need to also look at that. And so this is from the second. So I want to just get back to the third. I want to look at this spike. This is where net call premium was $1.1 million at around noon. And then it jumped to 2.8 million. And so that's interesting. That's something to be looking at. So let's check out the flow over here. And I'm going to set the date to just the 3rd. And we can see what was the time that I saw that over here. That was around noon. Can't believe I can't remember that. But around noon, that's this one. This is a $15 strike call. So that's in the money, currently in the money. And that expires on July 18th. If I've said the wrong months, if I said June instead of July, I'm sorry, but 7 July. And these are all like $1 million trades. Looks like they were all bullish. $17 call, $15 call. These were on the 3rd, so we can't look at whether those were opened or closed, but we can look at the data here, and we can see that on the 2nd, 35,000 of these contracts were open, or sorry, on the 1st, 35,000 of these were open, so the open interest was going from about 6.7 thousand open interest to around 42,000. So these are bullish. This is a $17 call, which is now in the money. Maybe they were sold, maybe they were offloaded. I'm going to have to add this to my watch list. I'll try to follow up on it. I am at work during the first part of the day on, and so this is coming up. This is coming Friday. And this is a $15 call here that looks like it's been getting sold. Open interest has been decreasing. Probably people have taken profits. But we do see this spike here that corresponds with increased volume. And so we'll have to see if that was open or closed. These are in the money calls. People have been taking some risk off the table, but we do see open interest decreasing from around 63,000 to now around 57,000. So, yeah. So we'll have to see if those were open or closed. I won't be able to see that data until Monday, though. But yeah, that's like a huge, massive deep dive into Mara. I don't know if it's going up or going down. I suspect it'll probably be hitting 21, but maybe it takes a month to get there. This, based on the doodle, that would be like the end of July. So maybe we do see a pullback to around 1650, and then this goes higher. So, I mean, that's something. And so I'm going to come back over here to go over the next one on the list. Oh, and actually, maybe what I want to do before I do that is come back to this, go back to the 2nd, filter that, and then maybe if I can, I just want to take a step back on this. And so I just want to get a screenshot of it. And copy to clipboard. And what did I post on Mara? I think I reposted this. Actually looks like a multi-leg trade. Multi-leg trade was opened, closed on the 2nd, extending a call and put from expiring 7/11 to 7/18 with more money on it going up than it going down. I'm just going to do 600,000. I go over in video that I'm recording as I type this, so you'll have to check it out. And this is for Mara. So I'll post that. So just following up on that. And now I want to go to the next one, which is Rivian. Okay, I'm going to try to be quick with this because I'm spending way too much time on this video, and I really want to talk about Unity because I think that's like the really exciting one. That's the winner. And so Rivian, what did I see? I got some, let's see, Rivian alerts the past couple days as it's retraced to around $13. And just checked the flow from yesterday, filtered by premium of $100,000 and noticed a $3.55 million order filled on the ask side for a $12.50 put that expires in September. It looks like 33.195 thousand contracts were opened yesterday after put premium has come down over the past 90 days. And so we can see that put premium has come down. This is put premium for this specific contract has come down. Big spike there. And it does look like there could be a head and shoulders pattern. Looking at my chart, levels possibly drawn, it looks like a head and shoulders pattern may have been formed and solid support around $11. That would be coming down to, just behind me. So like right here. So that makes sense. It's coming back to the lows over here, that trend line. So I could see this going lower. And so what I did, and, maybe this is not, let's see this, another one. This is, I'm not going to get into it because it's just, I don't have enough time. But yeah, so Rivian, I showed that. I think this could be going down, although it did go up about 1.55% on Friday. Coming back over here, I want to zoom back into 100% and looking at Rivian. So this is the $12.50 put that I was talking about in that post. This is on July 2nd. So that data was 12 put July 1st. Okay. There we go over here. And so if I go back 3 days, we can see, it's off the charts, this green candle here, $3.5 million. And, nothing since then. It's just been kind of flat. And so this put, was open on the 1st when the open interest was 24,000. Volume exceeded open interest. It was about 34.5 thousand. The number of contracts increased by 33,000, and that now puts open interest around 57,000. And so this is bearish. This suggests that Rivian could be going down to around 1250. Looking at it, that doesn't seem too unreasonable with it trading around 1307. Let's actually look at max pain for Rivian. And that is, it was 1350, closed below it. And then it's 1350 again, then 14. So, maybe it could be going higher, but maybe this is coming down to $11. And so, I didn't open up, this contract because like the premium for it is, like $1, which is $100 because 100 times the number of shares per contract is 100. So multiply that by 100. It's $100. And also because the expiration is in September, I like to have a little bit more wiggle room. So I had opened up just one contract, a $10 put. It expires in January. This is, $80. I think I got one at 85 a couple days ago, maybe on this day, maybe on the 2nd. And then I think I get another one at 75. But yeah, if we look at expand the data over here, this looks like, hey, that stands out a lot. Net put premium went up by 2.5 million, but then it came down, ended the day here. Net put premium increasing by about 1.19 million. So yeah, I mean, maybe this is starting to show signs, but then a couple days after it with not that much going on, maybe it's just early. Maybe we're just waiting to see what happens. So yeah, I mean, I do think that Rivian could be coming down to around $11 based on this data. And so, yeah, I mean, that's kind of what I'm thinking about over there. And now I'm just going to go on to the next one, which is Unity Software. Bronx Viking. Definitely encourage following him because he's always posting about you, whether it's memes, whether it's GIFs. Let's see. Some other stuff down here. Unity, game on. And so, because he had said on June 19th, if Unity Software gets a daily close above $25, game on. You know, so patience. That was June 19th. And now we're looking at July 3rd. Unity Software closed at a price of $26.13, breaking above that orange uptrend. So generally just looking really good there. He was also pointing out that, actually, I'm not sure if he was pointing out the volume, but yeah, I mean, there's some volume there on those moves. And let's see. Unity volume doesn't lie. Someone has been soaking up every dip all day long. So this is from June 3rd, looking at the 15-minute chart. So we can see all of that volume buying, pushing that up. So yeah, I mean, Unity's looking really good. I think Bronx Viking is a great person to follow on that. Also, Orlando, he's a big fan of Unity Software, the company, the stock, and yeah, so I think he's a really good person to follow for that, but he's not necessarily going to be like, conspiracy theorying it with Roaring Kitty. He just likes the stock. And so like Roaring Kitty is a deep value investor. I personally think that Unity Software is a deep value play. Orlando seems to think that as well, probably way more so than me. But that lines up with the Roaring Kitty thesis, which the Bronx Viking likes to have fun with. But I should note over here, could follow Orlando on YouTube, and he just put out this video going over Tesla, GameStop, and Unity. And he's gone over a number of stocks. He does maybe monthly or every other week, does a video. And so, yeah, I mean, I'd encourage checking that out. But yeah, let's see. What do I have over you? Just was looking for... just what I was looking for, and I found you pointing out bullish volume, just telling Bronx Viking that I love him. And, this is one that was bullish, but I haven't really done too much on Unity Software because, it really just started to look exciting. And so let's see, I've got two contracts here. One of them I hold, one of them I don't. And, so I'm just going to start this with 1 day here, just go over. So the one that I hold is the $65 strike call that expires in January. I think that this is going to be expiring worthless, so I think it's very risky to be trading it. But the reason why I picked $65 is because if we look at this chart and we can see, maybe there's a left shoulder here, maybe there's a head here. And if we get up to around 45, 43, maybe we then form, them just kind of compressing it here. Maybe we form a right shoulder over there. This inverse head and shoulders pattern would then have a move measured from the head here, the top of the head that's inverted, to the neckline. And so if I just do a little trend line here, going up, I guess I'll do it, like that. But that kind of gives us the distance. And, I probably want to do an arrow. And then I can just move this to wherever it would break that neckline. And let's just go like this. That would suggest a price of, around 70, 75, somewhere around there, that same distance, that measured move, which would take a long time to get, so this is where the cursor is. That's October 20th of 2026. That's a long time from now. But that's kind of why I picked the strike of $65, because I could see price getting up there, but not by January of 2026. So it's risky, but the premium's cheaper and, I'm on a budget. So that's kind of why I went with that. The premium's currently around 50. My average is right around 50. So that's nice. If it does pull back, I do plan on adding more. My shares are in the green. I don't have a huge share position, but I do like Unity. And yeah, so what we can see with this, let's see, there's this contract that stood out, which is the $26.50 call that expires this coming Friday. And so on the 3rd, it looks like there was this big red candle, which is maybe a little bit scary. The average fill was 104, and the candle premium is about $1 million. And that's red, so maybe it's selling. We'll have to wait and see, so I'll follow up on this. But from the 2nd, we had an open interest of 5,000. We had a volume traded of 5.9 thousand. Open interest increased by 5.6 thousand, now over 10,000, 10.6 thousand for 10,642 open interest. Maybe that's gone down. Maybe we see a decrease in this open interest by about 10,000, a decrease. So that would not be so good, but maybe it's getting rolled. So maybe that's actually something that we want to look into. And so I'm just going to expand this over here so we can look at, there's nothing that really stands out as being like, this went up a lot, so I want to look at it. But yeah, what time was that? Oh, sorry. What time was this at? That was on the 3rd at around 12:45. So maybe it wasn't this contract. I don't know. But this contract came up with something. So let's maybe go back 2 days over here. 3 days. No. 1 day we see net call premium increasing by $2.8 million, which we see over here in the expanded view. And 12:45 is around when that order was. And we actually see a pullback here. So let's look up the flow for Unity software. Type that in here. And I'm just going to do the 3rd. And let's just 12:45. 26. Okay, yeah, so this is it. The $26 multi-leg. That's what we got the arrows here. This trade is part of a multi-leg option strategy. Click to see it potentially related trades. Trades that are missing with the arrow symbol are not necessarily a single leg trade. Click for more details. And so we'll look at that in a second. But yeah, I mean, this is one that I'll want to follow up on. It's about $1 million. And so what I think is maybe they rolled this. So, okay, cool. These are all calls. Wow. I feel like something's tickling my leg. I don't know what it is. But yeah, so these are I don't even know how to look at this. This is so many things. So it's cool is that this was on the 3rd. And so what we can see is, man, I got to add all of these to, follow up on. But it looks like, okay, so this is a $25 call, $25.50 call, expiring on the 11th. And this was about $500,000 candle premium. Looks like it was bought, but maybe not. I don't know. It's green, but that just means it was filled at the ask, I believe. So it would suggest buying. But this, or yeah, I mean, I'm like, yes, this is on the majority on the ask side, yeah. And so this is the $26.50 call. This is like pretty crazy, I must say. Unity Software, all calls, all of these expire on the 11th. Oh my gosh. I've got to take a screenshot of this. I got to look at all of these. This is insane. I wish I wasn't working Monday. Okay, I'll get the unusual whale guys up there. And yeah, I mean, this is just thinking about the proportion. How will this look when I post it? But yeah, I mean, I think that's good. And so copy that. And so over here, OMG multi-leg options. OMG multiple leg options trade with you for July 11 expiration. All being calls with strikes of 25.50 up to 29 of 25.50 up to 29. Are we gonna see some big moves this week? What did it close at? 26. And then I'm going to say Q. How do you spell Q? Q, the bullish Shrek GIF. And then, oh, LOL. And so, yeah. Okay. So, I hope I'm not annoying him or anything. I don't really know. But, yeah, I mean, I'm like bullish on Unity. I'm like excited about that. And gosh, I don't know. Like, even at like 25.50, what's the max pain for this week? Sorry, my nose has been tickling me. Let's see, what am I looking at? Max pain. Okay, so Unity. What's max pain for this week? 24. Gamma squeeze territory, man. Unity's looking incredible. Incredible. So that's all I've got to say about that. And so, oh, and then, you know, one more that I was going to go over. This was kind of mentioned. I went over it on X, ticker symbol SBET, which is SharpLink Gaming. Somebody asked about it. I looked into it. And so this is kind of what I said about it. Looks like SBET only recently started to have options with a newly listed stock, as the net call / put premium red and green lines only started to show up on June 17th, while the stock price yellow goes back to the 30+ days. Possibly something is going on because the net call premium closed yesterday greater than $1 million. But it doesn't look like there's a clear trend with greater than $1 million in net put premium. But it does look like there is not a clear trend because there is some net put premium of more than $1 million. Personally, since I don't know enough about the company, I would lack the conviction necessary to have a successful trade because that would be like a waste of money and or time. And there are plenty of other companies to trade, so I'd pass. Also, the data doesn't have a clear enough of a bottom signal trend in premium to make me think it's done bottoming, and I'd rather not waste time, on top of capital waiting for it to bottom. Chart looks like it could squeeze, but it seems like a gamble to me, especially seeing that there was a recent reverse split, which explains why it was so flat before, making me think it was recently listed, but goes back actually to 2017. And so we can see the options data here not really being too exciting, or at least like there's not a clear trend. Looking at the chart, clearly did have a big squeeze here, but that was following this reverse split, and it's been kind of flat. But the thing that's kind of sparked my interest with it, I don't plan on getting a position, but not planning on buying any SBET, but actually it might be bullish because I'm bullish on Ethereum and just saw this on Altcoin Daily's video from July 3rd. And so I'm wondering if it's a sign that somebody just asked me about SharpLink Gaming. I don't know anything about it. I look into it a little bit cautious. And then I see this in a video that I casually watch for my own reasons because I follow Altcoin Daily. And I saw this, took a screenshot of it. And then if we look at my reply to that, this is that SharpLink Gaming will ring the NASDAQ closing bell on July 7th. So that's coming up. And so we're celebrating our emergence as the world's largest publicly traded company to adopt Ethereum as the primary treasury asset. Ethereum isn't just part of the strategy. It is the strategy. The ticker is SBET. And so that's interesting. And I don't have it, but like with MicroStrategy being a Bitcoin treasury company, and also with Tom Lee recently talking about doing that, but with Ethereum, and now SharpLink Gaming, I think that a way to get an edge, or maybe like the alts for crypto, might be these treasury companies. And so I think that this could actually be a very nice way to swing some crypto without actually swinging crypto. And let's see, from Crypto Banter, I forget his name, is it Ron or Ran? He's talked about how, like Bitcoin is, the major holding in the portfolio, and then below that, the next largest holdings should be, rather than alts, be actually crypto treasury companies. And so I find SharpLink Gaming to be really interesting in that sense. But yeah, I'm not going to get into it, and I'm just going to come back to this. Make sure you follow me on X because I'll be posting throughout the week. And also, as always, make sure you subscribe to the channel. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more chaotic videos like this one. Thank you so much for watching. Hopefully having a great long holiday weekend, and I'll see you probably tonight for Ticker Request Live around 10 p.m. Eastern. I'll see you guys then. Take care.